So I think it's safe to say that it's been a very difficult time to be an investor in Plug Power, as we've seen a 33% decline in this stock in just 1 month. But where most see pain, some see opportunity, and it turns out that investment firm Blackrock sees exactly that in Plug Power stock despite its massive decline. So in this video, I'm going to share the latest on how many shares BlackRock scooped up of Plug Power, and at the end, I'll react to a very important argument that is often brought up against stocks like Plug Power to see just how risky it is to invest in growth stocks in this kind of market. But before we get into it, guys, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So first things first, as you can see, BlackRock has recently scooped up shares in a lot of different clean energy stocks that include fuel cell and Plug Power. Now the interesting thing is that this is not the first time that BlackRock is buying equities in the clean energy space. They actually have a whole investment firm dedicated towards just investing in ESG and hydrogen plays that are going to help advance carbon footprint reduction. And as you can see, for at least Plug Power, BlackRock has been investing in this stock since 2016, which is obviously before we saw the massive move in 2020 and 2021. Now granted, back then the position was relatively small because Plug Power is highly unprofitable and they were in penny stock territory, but regardless, it shows that BlackRock's investment strategies do have a very good forward-looking theme, and that they can often be ahead of the curve in terms of analyzing investment opportunities in the high growth areas. But with Plug Power not anywhere close to profitability in 2022 at least, the fact that BlackRock has increased its stake in the company shows us a sign that there could be a big catalyst coming up for this business in 2023, which is right around the time that we expect cash flows to turn positive. Now, obviously, the big question is how much did BlackRock actually buy a Plug Power stock relative to their regular position? And as you can see, they increased their position by a very significant amount of around 21%. But by far the most important part of this new position disclosure is the fact that BlackRock has a history of having a very long-term vision for when they're buying their stocks. And so unlike a lot of the swing trade based firms that often tend to file these SEC filings like the 13G and 13As, BlackRock's vision is very solid and they're not going to be trading in and out of this stock and potentially affecting the short-term price action. But I'm sure the question on all of your guys' mind is that why has the stock still underperformed the entire market even though institutional inflows into the company have been increasing? And to answer that question, I'm going to react to a very short clip from another media outlet where they discussed some of the risks of investing in growth stocks in this kind of bear market.
George, if you're a buy and hold investor, you believe in this company, you believe in their message, their goal, I get it. You want to allocate some money, buy some equity shares, set it off to the side, willing to weather the storm. That's awesome. That's great. Again, if you believe in that, you think this is one of the companies that's gonna figure this stuff out, as it seems like there's still so much investment and interest in this. But if you're a trader in the short term, George, I mean, what is this company going to be able to do to set itself apart from the market? I don't see a world where this stock suddenly is higher consistently if the market itself doesn't find a tradable bottom and work its way higher. I'm not saying that we aren't near that or that can't happen, but it seems like in a tightening monetary policy environment and liquidity being sucked out of the system, these cash burning companies are not the places that what capital is left are going to.
Well, that's exactly right. Now, trying to pick a tradable bottom in this market, Alex, too hard. I mean, I would suggest if you just look from a broader perspective at the NASDAQ, all the way from the pandemic lows in March of 2020 to the highs in November, we're almost 50% down from the highs to low, that entire move. So that might be a tradable bottom for the markets, I can't say. But for Plug Power and all of these stocks, which again are secular stories that are still not profitable, when it comes down to top line sales, there is promise in these companies. Top line sales for the company is about 90% year over year. But unfortunately, if you look at their operating cash flow, it's going further in the red, and that speaks to higher capital expenditures. And when you have higher CapEx, you need financing, and that comes from equity. So these are all, again, some of the variables that are going against the grain for companies like Plug Power. But look, at any point in time, especially maybe around the 11,900 or so in the NASDAQ, maybe the 3950 in the S&P, we'll find a tradable bottom where you can see some nice bounces in stocks like Plug Power. But I suggest they may be short-lived because of the market environment we're in, and we haven't changed. And the market environment is still bearish. The bears are still in control. They're in control of this stock. So you have to be mindful of that as an investor. But from a trader's perspective, again, you could see tradable bottoms in the near future, which can be quite meaningful, but they may be opportunities to sell out of these stocks like Plug Power, and also some of these other, again, non-profit-based secular technology names, which are still under a lot of pressure.
Now, although I do agree with these guys on the fact that unprofitable companies are not really going to do well in a bear market like right now, because we're seeing stocks like Facebook, Amazon get absolutely destroyed, and those are some of the highest margin, most profitable and consistent stocks in the entire stock market globally. And so if we're seeing those come down, chances of a Plug Power stock performing well is very low. But where I do disagree and where I do think we need some more clarification is understanding the difference between cash burn companies with no outlook and cash burn companies with consistent revenue growth and economies of scale. And even more importantly, we want to look at those cash burn companies that have a very solid balance sheet. And as you can see, Plug Power has significantly more amount of assets and cash than they have debt and liabilities in the short term, which means that these guys are not going to have to raise money for at least the next couple of years, even given their current capex and cash burn position. And so even though in the short term as a trader, this stock is not going to perform very well if you're trying to long it, in the longer term for at least a 2-year outlook, this is actually a very decent buying opportunity, even though I agree the valuation is still a little bit rich. But as we've seen, this rich valuation is being supported by around 90% revenue growth year over year and a massive outlook for economies of scale and partnerships. And it's safe to say that a lot of the short-term headwinds when it comes to EPS misses and larger net losses are being primarily attributed to their massive capital expenditure. And so the bottom line here is that yes, even though liquidity is going to be sucked out of the stock market in 2022 and investor enthusiasm is definitely at an all-time low, a company like Plug is going to have a much better experience navigating through this kind of environment than any other company that doesn't necessarily have the good balance sheet position that this company does. Because not only will they be able to avoid raising high interest rate money from banks, but they can also prevent from raising money to the equity market and further suppressing the stock price. But anyways guys, that's just my take on some of the recent arguments I've seen against Plug Power's valuation, but definitely let me know what your guys' thoughts are down in the comment section below. But anyways guys, I hope you enjoyed this video and I'll catch you guys in the next one. Take care.